Markets are dipping once again today on the back of another hot inflation report. Some of the data that the Fed watches closely came in hotter than expected, confirming the thesis that we are looking at a double peak inflation, and that the disinflation that Powell mentioned 17 times in his last statement after the Fed meeting is what is actually transitory, not inflation itself. So the Fed has been wrong the whole time. They're still wrong now. And the markets obviously don't believe the Fed. They don't think the Fed has anything under control, but yet still kind of holding up because, again, there's a lot of capital out there that needs to be allocated. And basically what happened today is that the Fed's preferred inflation gauge came out stronger than expected. And it was the core personal consumption expenditures price index, the PCPI, whatever they call it, but the core personal consumption expenditures price index, the Fed's preferred measure of inflation, rose 0.6% in January, 4.7% from a year prior. So I know that everybody watching this, I don't think you've seen anything come down. Housing is still up in most areas. Food is still up. Everything is still up. Restaurant meals, the whole 9 yards. The labor market is still way out of control and strong. And the Fed, anything that they've done so far has not affected that at all. Hasn't even affected really the construction or housing market. So, the Fed's going to have to get more aggressive. They are now talking 50 basis points. I think the chances are becoming more likely that they'll go 50 basis points at the next meeting versus 25. They should have done 50 last time, because inflation is the big one. I mean, that's until they get inflation down, you can't really do anything else. So the big debate in the markets is the bottom end, mostly in the Bitcoin cryptocurrency markets. A lot of people are talking about the bottom being in. A lot of indicators would show you that the bottom could potentially be in that 15.7 low on Bitcoin, and Ethereum. I believe it was around, what was Ethereum low? Right around, $870, somewhere around there. Could potentially be the lows for the cycle, depending on how aggressive the Fed gets, how bad things get with inflation. If inflation doesn't get back under control, the Fed is going to have to push the economy into a recession and make things a lot worse in order to get inflation under control. And what the markets are betting on is that everything's going to land softly, that the Fed's going to be able to get inflation under control without crashing the economy. And it just doesn't look like that. The economy is too strong. Jobs are too strong. People are still spending. The housing market is still too strong because rates are still too low to bring any real correction to the housing market. All we've seen is a correction off highly distorted levels. But, builders are still building because there's not enough inventory. Rents are still going up in a lot of areas. So there's still a lot of pressures out there. And, the reports that they're looking at and or manipulating to make them look how they want to make them look, at the end of the day, you and I know everything is still going up and has not come down at all, including gas. Maybe it's backed up a little bit last week, but it shot back up again, not to where it was at the peak of the invasion of Ukraine by Russia, but still way higher than it should be. So until they get that under control, we can't expect markets to settle in and find a bottom. But these lows are most likely going to get tested, especially if the Fed does do 50 basis points, and potentially put in a new lower low in the markets. But right now, the likelihood is they'll get tested. And again, the big debate is, are the lows in? When the real question to be asking is, are the highs in? Have we seen the highs in the market for the year? Obviously, this was last year's high, but have we seen the highs already this year? And is it going to be downhill to ranging for several years until inflation's under control? And that's the real question. A lot of the analysts and a lot of people at the Fed think that they were going to get inflation under control quickly. And I've been saying on this channel for a while, it's not going to happen quickly. It's not going to happen overnight. We'll be lucky to see inflation start to actually really decline in a year or two. And that's assuming the Fed has the wherewithal to actually, and the backbone to actually do what's required to get inflation down, because that's what's putting real pressure on, real working Americans out there, people that are on limited incomes, retirement incomes, low wage earners. That's who it's hurting the most. And that's, what's going to do the most damage to the economy in the long run. So I think the Fed is now realizing that they're wrong once again. Their credibility is, I mean, they have no credibility at this point. They lost it the first time with saying that inflation was transitory. They're losing it now with not being able to get it down and denying that we're facing a double peak inflation situation, and that this disinflation narrative, maybe there's a couple of things here or there and some pockets here and there, but as a whole across the board, again, I don't see anything coming down in my world, and I don't think anybody else I know are seeing prices come down pretty much anywhere else for all the things we need. So right now, this is just the market ranging, again, putting in higher lows and higher lower highs, higher lower lows, higher lower highs in this range, trying to reverse the trend, getting a lot of people bullish. And again, like I said, the pain trade was higher. We did get higher than what a lot of people thought on this rally, much bigger rally than the last one, but then kind of ranging and now fizzling out on the inflation news and information. The VIX retracting a little bit, working its way up for that next spike. That will come if the Fed does 50 basis points. We'll see the VIX spike, we'll see markets drop, and we'll get the test of the lows. Dixie kind of ranging here, hasn't quite broke that 105 level yet. The 10-year kind of ranging at under 4%, headed for this nice W pattern on the daily. I think headed to check this 4.3% level again. Short-term rates are higher than they've been since 2007. Let's go back and look what 2007 looked like on the S&P, just to bring context into things in terms of how this stuff can play out. Let's go back. Here it is right here. 2007 had the double peak. Markets dropped. And this, this took a while. I'm on the daily chart here. So from the peak to the last range was about almost, it was 153 days, about a half a year right there. Then had a little drop with a bounce, and then finally rolled over when the banks started failing, and we had, the banking crisis. Then markets stabilized a little bit, fell down one last run, and then the V-shaped recovery, because that's where the Fed jumped in. QE was invented. Zero interest rates were employed into the market to stabilize things. So right now, where we're at is it looks like inflation is not under control at all. The Fed's lost credibility. The markets still are kind of betting on that inflation will come down on its own and we'll have a soft landing and avoid recession. But I think at the next Fed meeting, we have one more inflation report that's going to come out before that. And if that comes out hot, then the Fed has several reports, a couple of months of confirmation. They're going to have all of the ammunition to do 50. If they don't do 50, the markets might tank even more, because that's going to do more destruction than just going ahead and popping the 50 basis points and, trying to really take care of this. So the Fed could be talking about, a 50 basis point rate hike here at the next meeting. They will telegraph that. So these are the things that we're looking at. If you're new to the channel, I talk about all things entrepreneurship, real estate investing and development, buying businesses, starting businesses, investing in markets, crypto from a macro perspective, because it's all about building businesses that generate cash flow to invest in other assets like real estate, like stocks, like crypto, to grow and sustain your wealth for generations. So that's what this channel is all about. I'll see you on the next video.